Oh, here we go. Hello and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet, and I got a haircut and I shaved and I'm done with antibiotics. We're going to hit Gold's Gym today and we're going to start getting our pamp on. You know what I mean? Because apparently we say pamp instead of pump these days on the Twitter sphere for crypto Twitter. So don't worry, I'm keeping up to date. It's hodl, it's pamping, it's, you know what I mean? We got this. I am integrated into the crypto online speech. I know what I'm doing here. Stay with me for more crypto terminology. Today we are going to be talking about Ethereum miners have a $319 million crypto hoard that hangs over the market after the merge because, you know, it's not anybody's fault at Ethereum. It's always the miner's fault, even when it's moved to proof of stake. And that trend seems to continue through a lot of cryptocurrency projects, including but not limited to Ergo as well. Unfortunately, you know, it's not very fun being a miner in the bear market now, is it? Because not only are you not making any money, but everybody says that all you care about is money. And if you point out legitimate issues, they just tell you that you only care about money. And that's it. I'm sorry, I'm getting a little jaded today. Let's go ahead and talk a little bit more about what else is going on. JPMorgan sees concerns for the Ethereum blockchain after the merge. Bitcoin miner Iris Energy signs a $100 million equity deal with B. Riley. Bitcoin miner Marathon Digital downgrade at BTIG on headwinds from Compute North's bankruptcy. And Ravencoin now has nodes on Flux, which is awesome. So we'll cover that. And then we'll be talking a little bit, of course, about the issues with Ergo. We'll track the difficulty monitor. We'll see what the block times are at right now. and we'll see if there's really a way out of this issue that Ergo has run into, I think, with the epoch changes and the difficulty adjustments, and then we'll go on from there. I don't have any information so far for an EIP for Ergo, so hopefully we'll get that information at some point, and then we'll see what the proposed fix is and how miners can vote on it, etc. Let's get into all of that and more right after a word from today's sponsor.
Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research.
Welcome back, ladies and gentlemen, boys and girls. First things first, we do have a new Radiant wallet available. So if you want to go check that out, you can go check that out. They removed the warning about legacy addresses and removed hardware device option from the new wallet wizard. So it's Electron Radiant version 0.1.2. Yes, even the small coins I try to cover, I go over all of them to the best of my ability and make sure that we're up to date. So obviously we've covered a little bit of Radiant. You should be aware of new wallets that are out. You can find the link to it down in the description below. Now, we also have a new mining software release from LOL Miner, released 2 hours ago, version 1.59. And they significantly improved Casper performance and efficiency on the NVIDIA Turing and Ampere GPUs. Also, the new codes are now working much better when GPUs are power limited, meaning previously they were having some issues with power limits versus absolute core clocks. Now, this is, I think, a pretty contentious debate within the community. I'd like to hear your thoughts. But power limits versus absolute clocks when you are overclocking for specifically a core intensive algorithm. Now, why is that contentious? Because you can get better performance out of NVIDIA GPUs with GPU Boost 3.0. Meaning basically because of GPU Boost 3.0, technically NVIDIA GPUs will overclock themselves to the highest capable, and you don't have to do as much if you just utilize the power limit. Now, of course, with Caspa and LOL Miner version 1.58, there were issues with this, so they were suggesting doing the absolute. Now, I think some people got confused, and they were saying you need to use the absolute clock when you are overclocking for any Caspa mining software. Anyways, I think that there is a case for both, because obviously if you do the absolute core clock, you're going to have less power spikes, which means potentially better efficiency over the long run. However, if you are letting the GPU do its own work, technically there could be some efficiency benefits there, provided, of course, the mining software is working properly. So obviously, with LOL Miner version 1.59 now supposedly working properly with power limited, it could mean that there's some more benefits to power limited versus absolute core clock in relation to specifically core intensive algorithms. They also slightly improved Casper performance and efficiency on AMD Navi and Big Navi GPUs, and Casper performance statistics should now be a bit more smooth. So there you go. There's all the LOL Miner updates for the day, all the miner updates, all of the GitHub updates, I guess I should say. Let's talk about the Raven in the room. Full nodes now are available on Flux. Now, there's a great guide that I linked it down below for you guys to check out from Daniel Ramirez, who is a Ravencoin community member over on Twitter. And I shared this over on Twitter as well. But Ravencoin is a project, fork of Bitcoin, specialized in asset tokenization. Following the Bitcoin Fair, open and free launch is represented by his community of users, developers, and miners. Are on the path of seeking decentralization, elimination of the non-trusted middleman. Ravencoin was born. Many aspects of Ravencoin on a go-to blockchain for asset representation. Of course, this is pretty much a PR article for Ravencoin at this point, just so you're clear. So the big news, though, that I really wanted to get into is this part 2. A big part of decentralization process depends on full nodes running, and so there is a solution making use of the decentralized hosting infrastructure provided by Flux. And so you can go through he does have a guide here. You guys can follow it. You can use, basically, it is in the, I believe, let's go ahead and see, in the marketplace. It is a marketplace app, I think. Let me go double check. Yeah, so I believe it's an official marketplace app. So it's actually even easier. Yeah, it's even easier to run than, say, like a Minecraft server, or like we showed you guys before, a Valheim server, that sort of stuff. So I think this is a big deal, because what we've been talking about recently with in relation to regulation, right, is that the Fed is essentially saying, hey, if the nodes are primarily, a majority of the nodes for your blockchain in relation to Ethereum, right, are hosted within the United States, i.e. on AWS, then the US government has jurisdiction over those transactions. So what do we need to make sure is happening when these networks are getting built out? Well, decentralization of the node structure, so that not one country has jurisdiction based on node location. Now, here's the thing about that needs to be basically clarified in the debate between proof of work versus proof of stake. The nodes provide consensus. They don't necessarily process the transactions. That's done by the miners. So miner decentralization would be important. The other note about that is the SEC has to gain that access and that jurisdiction through a security. So they have to do that specifically through, right now, a proof of stake coin. So is there as much risk for a project like Ravencoin? No. But is it still probably best practice to spread out those nodes and that node infrastructure as much as possible? Yes. Is it awesome that we now have that ability on Flux? Yes, because this is going to be the cheapest way to build and deploy nodes in multiple geographical locations. With a click of a button. You know, of course, always running a node at your house is awesome, but if everybody lives in the US and is running a Raspberry Pi with a node here and there, that's not going to fully decentralize. The kind of oddity here, of course, the elephant in the room is that, you know, you're running a Flux node that's running a Ravencoin node, which is kind of funny, but at the end of the day, it is what it is. And I'm happy to see Ravencoin, you know, getting some attention from Flux. You know, at this point, I think what we've seen from Flux is they're really, like Daniel Keller was not lying. They are clearly trying to integrate with proof of work as much as possible. And I think that in the given space and time that we are at with post-merge, it's much needed and much appreciated from the community that they are focusing on that. Now, Bitcoin miner Marathon Digital downgraded at BTIG on headwinds from Compute North's bankruptcy. Marathon Digital's primary mining hosting provider, Compute North, filed for Chapter 11 protection Thursday afternoon. Marathon Digital has one less bull on Wall Street after BTIG's Gregory Lewis downgraded the stock from a buy to neutral following Compute North's bankruptcy filing. A crypto mining data center provider, Compute North, is the primary host for Marathon's mining rigs, noted Lewis in a note to clients, and the upcoming restructuring is likely to slow Marathon's hash capacity growth in the near term. There's some good news over the long time frame, said Lewis, as Compute North's bankruptcy may give Marathon a chance to build a data center infrastructure footprint at distressed pricing. Lewis also expects that current hosting contracts will be renegotiated. For its part, Marathon tweeted late Thursday that the bankruptcy protection filings won't affect current mining operations and that the company is in communication with Compute North. Marathon Digital shares are down 5% early on Friday as the downgrade combines with lower markets in general and another decline in Bitcoin to below 19,000 US dollars. Obviously, if you look at the markets right now, they're pretty rough, right? You got Bitcoin below 19,000. You got Ethereum below 1,300. We don't talk about XRP. And then, of course, Binance is up a little bit, but we'll kind of get into all that too. But we have more miner news. Bitcoin miner Iris Energy signs a $100 million equity deal with B. Riley. Now, B. Riley previously signed a similar deal with Core Scientific in July. Bitcoin miner Iris Energy, IREN, signed a deal to sell up to $100 million in equity to investment bank B. Riley over the next 2 years, marking the bank's second big investment in the industry that is facing serious market headwinds. In July, B. Riley signed a similar deal in nature and size with Core Scientific and the largest Bitcoin miner in the world by actual hash rate. Publicly traded Bitcoin miners have seen their stock prices tumble this year as the price of Bitcoin has slumped by as much as 60% and energy costs soar. B. Riley may buy up to 25 million of IREN ordinary shares in the next 24 months starting Friday, according to a filing with the U.S. Securities and Exchange Commission. If the bank chooses to buy all of those shares for about $100 million, it would have a 31% stake in the miner, the filing said. Iris Energy issued B. Riley 198,174 ordinary shares as consideration for B. Riley's commitment, which are included in the total. Shares of Iris were down almost 12% in early trading on Friday. As we talked about before, though, I think obviously large companies, especially companies that are tied in with energy companies like Iris Energy, hence the name, have a significant advantage within the Bitcoin mining space. I think that doesn't apply to the GPU mining space because, as we've seen, I think a lot of the large Bitcoin miners are getting pushed out. Hut 8, if you go follow them over on Twitter, you'll notice is pushing high-powered computing and showing that off to everybody because I think they overextended their GPU mining operations to the point to where they're going to struggle if they try to mine anything at all, as we start to find out, post-merge. So that's kind of what I'm seeing there. But JPMorgan sees concerns for Ethereum blockchain after the merge. This is interesting because JPMorgan's now finally getting in. It almost feels like JPMorgan watches the YouTube channel and then says something. I'm sure it's not my channel, but it always feels like we talk about some problem and then or good part and then JPMorgan comes in and goes, "Hey, there's a problem here." The platform has become less decentralized after the switch to proof of stake. No way! Oh, bummer, the bank said. JP Morgan spelled some concerns out about the Ethereum blockchain following the network's transition to proof of stake consensus mechanism, a process that was called the merge. The change earlier this month spurred a hard fork, splitting the blockchain in two and giving rise to an offshoot chain called Ethereum Proof of Work. Some exchanges and platforms have shown support for the forked version, which still uses proof of work verification, and at least 19 former Ether mining pools are active on it, JP Morgan said in a research note on Wednesday. The fork chain could divide the Ethereum community, the firm said. I don't see this being an issue, because obviously ETHW is just basically failing off the get-go. To be fair, I think they have some NFT and some DeFi projects that are working on them, working with it now, and they are on crypto.com now, which is depressing because there's still no deposits for Ravencoin. Flux is only if you wrap it in Binance Smart Chain, and ETC has confirmation times that literally take like a month to get your money out. But ETHW added right away. Son of a gun. JPMorgan noted that the price of Ether has declined sharply. Oh man, really? This drop was probably caused by a combination of the buy the rumor, sell the news flow specific to Ethereum's merge event, together with the widespread weakness in risky assets as a result of more hawkish central banks, the report said. The merge is the first of 5 upgrades planned for the blockchain. Meanwhile, a move to backwardation in the futures market is a, quote, manifestation of the shift towards more bearish sentiment in crypto markets in recent weeks, end quote, the note said. Backwardation occurs when the spot price of an asset is higher than its futures price. In terms of mining, Ethereum Classics token has been the main beneficiary of the merge. The network's hash rate has doubled, with the token of other graphics processing unit compatible proof of work blockchains such as Ravencoin and Ergo also witnessing big increases, the note added. Yeah, except, you know, obviously elephant in the room there is Ravencoin, you know, probably took, I want to say, we'll go double check it here in a second, but really only took about 20 terahash off the network. Was it 20 or 40? We'll look in a second. It might be up to 40. Either way, you know, 40 terahash compared to 1 petahash, not that much, right? Ergo spiked up to 250 terahash, came right back down, and as we look at it today, the hash rate on the Ergo network is 20 terahash below what it was pre-merge. So, you know, Ergo at this point is going in the complete opposite direction, primarily because obviously they had a difficulty adjustment problem that, you know, made it to where essentially, because of everybody moving off of the blockchain, we talked about this yesterday, but everybody moving off of Ethereum and moving over to it, it skyrocketed the difficulty. And then because the difficulty was too high, all the miners left and the block time slowed down and the difficulty can't readjust. I also am not sure that the difficulty is going to readjust anytime soon. And we'll be tracking that every day here on the show. So if you are ready to track that, sit back, relax, and grab a sip of coffee out of your Bitsby Trippin' coffee mug, and make sure you subscribe to Bitsby Trippin' on YouTube. Also, though, because you are on this channel right now, we have 467 concurrent viewers, so thank you guys. That is amazing. Hit the like button. I'd like to see 230 likes on this video before we are done. See if you can help me out with that. So let's get into it. This is a big one. Look, guys, Ethereum, they're having issues, and it's the miners' fault. It's your fault. You know, they moved to proof of stake, yes. You know, maybe you thought, you would think that, you know, the problem would be with the validators or the users or the developers now, but no, sir. Ethereum struggles are directly related to the miners still because, well, what have they done since the inception of Ethereum? Blame the miners for literally everything. And that continues to be true. Ethereum miners' $319 million crypto hoard hangs over the market after the merge. Miners dumped over 16,000 ETH worth more than 20 million in the past week, on-chain data shows. No, really? Oh my God. We talked about this yesterday, and basically the idea of cross-pollination that miners basically have. Miners are essentially the bees that pollinate the cryptocurrency that they work for. And, you know, at the same, that was what was happening on Ethereum. The reason why there were so many transactions on Ethereum pre-merge and not as many post-merge is because a lot of what was going on between, you know, layer 2 side chain payouts, processing transactions back to layer 1, decentralized finance, and the liquidity pools that were involved with participating in that, the borrowing on Aave of miners' money to buy more rigs. All of that stuff came from the miners. And the miners aren't there anymore. So what are the miners doing instead? Well, they're just dumping their Ethereum. And they have more to dump. The Ethereum miners still have about 245,000 Ethereum left and no longer any business affiliation with the blockchain network. In the years and months leading up to the Ethereum's blockchain's historic shift last week to a more energy efficient system, data miners working for rewards on the network had accumulated nearly $341 million worth of cryptocurrency Ether. Now, a week after the merge, crypto analysts are warning that miner sales of their hoards could become a source of near-term downward pressure on the cryptocurrency's price, with the market already sinking by 19% in the past month. Miners dumping their ETH is an overhang that we'll have to get through over the coming months in order to resume up-only mode, but it will happen. I have a different theory. Yes, I think miners add selling pressure, but I think miners aren't selling at a loss to their electricity. So, I think the only thing keeping the Ethereum price from not going down to $762, which is my little prediction, by the way, is the fact that miners still have ETH that they're dumping, and they are not dumping it at a loss to their electricity costs. As soon as the rest of the 245,000 ETH is liquidated from the Ethereum market and the miners have paid their electricity bills, Ethereum has no reason to maintain price outside of basically monetary manipulation, making it deflationary. Blockchain data assembled by OKLink appears to show miners starting to sell down their stashes over the past week. Ethereum miners dumped over 16,000 Ethereum from September 12th to September 19th. The decline reduced the miners' combined balance to about 245,000 ETH. That's a lot of ETH left over, and that's a $319 million worth. Lucas Otomuro, head of research at Into the Block, attributed the decline to balances to miners moving on to other chains. The thing is if we're realistic about it, most miners aren't able to move to other chains now. As we've been monitoring the hash rate, it looks like more and more, over half of the hash rate that was on Ethereum has been just turned off at this point. And there's probably currently the market can't handle even the amount of hash rate that's on the networks. And if we really start to put, the detective work down on things like mining pool stats, etc., it's not completely unheard of that we will see, I think 90% of the mining hash power get shut off in a little while, especially with things like Ergo can't take on any additional hash rate. And offer any incentives to miners. Ethereum Classic's completely flooded by ASICs, and no GPU miners are touching it with a 10-foot pole at this point. You got, possibly Ravencoin, but still sitting in, frankly, too hot a weather, in my humble opinion, for a lot of miners, at least from what I've heard. It's also not profitable. And the amount of GitHub commits need to be upped, I think, on the Ravencoin project. But we'll talk about that later because we are going to be talking to some Ravencoin people. And then if we look at all the rest of the projects, Flux is probably, as far as like GPU mineable, in the best position right now. I think it was definitely the most prepared. But, it's still not profitable. And then if you are trying to bounce around the smaller projects and do all that, I think you're more at a whole miner level. That's kind of just what I'm seeing right now. So he says they're taking profits from their ETH holdings, he said. It's also possible that some miners may have sent some Ether to exchanges to handle an airdrop of new tokens from a splintered blockchain that aim to continue on with the Ethereum blockchain's now abandoned proof of work system. That effort since mostly fizzled. Ether's price had soared in the weeks before the merge as some traders also jockeyed for the airdrop, while others speculated that the shift might lead to a surge in institutional investment. But when the merge actually took place, the cryptocurrency's price suddenly plunged in what analysts term a buy the rumor, sell the fact market reaction. The sell-off also coincided with the run-up to this week's Federal Reserve's meeting, which included a pledge to aggressive monetary policy that has put downward pressure on risky asset prices from stocks to cryptocurrencies. Quote, if miners had accumulated Ethereum at profit or they need to pay for their electric bill, they would be incentivized to sell at a profit, especially with the expected and actual increased volatility, said Alexandra Lores, director of blockchain market research at Quantum Economics. For the first time, these miners have no future business relationship with Ethereum, Lores said. It's possible that miners' move may have contributed to the immediate weaknesses in the prices post-merge, according to Jeff Dorman, Chief Investment Officer of digital asset management firm Arca. The Ether price was trading around $1,300 on Thursday. It's not a sure thing that all miners will liquidate their holdings, Dorman said. Maybe some miners will turn into speculators and hold for a better price. Maybe some will turn into stakers and secure the network. But that mining business is over. The new network relies on stakers, investors who help secure the blockchain by staking their Ether instead of energy-intensive proof-of-work mining the Ethereum previously used. To be sure, the miners' remaining holdings represent a fraction of the total ETH supply of 119 million based on CoinDesk data. Ex-Ethereum miners who choose to continue proof-of-work mining can shift to a different chain. Related altcoin prices have seen significant increases, with Ravencoin being up 64%, we'll verify that in a second, and Ethereum Classic up 75% in the past 90 days. Chain analysis economist, Ethan McMohan, said he sees the miners selling as a temporary shift in moving away from Ethereum. If miners' initial reason for holding Ethereum was for the store of value or investment purposes. Yeah, here's the deal. Like I said, once it's sold off, I don't know what holds up the value of Ethereum. You tell me. Well, I'll tell you what does, by the way. I actually do know. Ethereum there was a very specific manipulation of the monetary policy that was put into place pre-merge with EIP 1559 that was specifically put in to address the problem of the fact that there would be no direct relation to real-world cost in the minting of new Ethereum. So what they had to do to make sure that Ethereum holds some sort of price is that they had to add a burn mechanism that would make Ethereum go deflationary. And once it moved to proof of stake, they removed the minting process as well. So this is basically how you manipulate the monetary policy to compensate, hopefully, right, in theory, for no longer having a real world tie to any value for the coin. So that's why they did it, right? They're not stupid. This is why Ethereum is supposed to be deflationary and not have any more minted in. That's just the way it goes. Now, I made a video yesterday or late last night. Obviously, if you guys watch me on Twitch, you were aware, I guess a little while ago, that I had some frustrations with the fact that Ergo is now in a lot of trouble. We started calling this out a few days ago. But to be fair, we've been talking about the difficulty adjustment problem for over a year. We brought it up pre-merge on September 10th with CW at Sigmanaut on Twitter. And it was mostly shrugged off for the most part. It felt like to me, maybe that's not fair, maybe it is. But now, of course, there are forum posts, supposedly some EIPs that's supposed to be coming here today. I'll keep you guys up to date on that. And but Ergo's in a little bit of trouble. I think they're in more trouble than they're letting on. And we need to pay attention and see if we could. I did say that we should try to help, but I'm gonna show you guys why I'm not so sure that we have the hash rate to help. CW says as hash rate turns off or moves away from Ergo, block times increase, thus extending the epoch. He says to assist short-term point hash rate towards Ergo to help reduce adjustment time. Long-term solutions are being discussed and modeled, and they're being discussed over here on this Ergo community forum. You guys can go check it out. The problem is, let's refresh this. Yeah, the epoch keeps getting pushed further and further out. The block times keep extending, which means the epoch will change. Why does the epoch changing matter? The epoch changing matters because you have to wait till the next epoch for the difficulty to adjust. As it sits right now, the difficulty is essentially at the level of if the network had 250 terahash on the network. So what does that mean? It means that Ergo is so difficult to mine that blocks can't be solved by the amount of hash rate that's on the network. So it takes forever for a block to be solved, which then results in, of course, it remaining difficult for a longer period of time. I've kind of discussed this a ton. I think you guys are aware of course, what's going on here, but it is getting worse. So we're going to track this every day. We are now up to 7 o'clock on the 25th. If we were looking at this yesterday, it was supposed to be around noon on the 24th. So we're over 24 hours already, increased in less than 24 hours. The problem is that this could turn into basically a never-ending issue if hash rate continues to fall off the network and there is not a change or an EIP that is proposed and implemented, frankly, quite quickly, in my humble opinion. Now, obviously, I need to have some devs on. I need to talk to them and see what they think. This problem seems to, now being acknowledged. What I'm seeing is a threat that seems to be much more serious than I think is being acknowledged. That's how I feel. I could be wrong. But let's just look at this problem, okay? Right? Massive amounts of hash rate comes onto the network, drives the difficulty up in a short period of time, right? Because the difficulty is low. It has to wait till the next epoch to adjust. So the block times are shortened, right? That also is beneficial to the large miners because they get paid out more ERG than they should. That adds actually bad selling pressure to Ergo as well, which I would like to mention is not good for Ergo in general. But then what happens is all those miners leave because it gets too difficult. Now, when they leave, all the block times are slowing down. Now, if more people continue to leave, you end up having basically a chain that is infinitely difficult and nobody ever wants to mine it because essentially it's impossible. If it dropped down to I don't know, like below 10 terahash or something like that, it could potentially end up being in a position where no blocks could ever be solved again on Ergo. Unless, of course, there's intervention with an EIP. Are we in that range yet? No, but that is the potential, right? I mean, you can see here time between blocks are pretty large. The last block, a little bit better, right? Maybe about 3 minutes. But the block before that, or not 3 minutes, excuse me. Yeah, 3 minutes, right? But the block before that, 16 minutes. The block before that, 16 minutes. The block before that, 9 minutes. So we're going in the wrong direction. And I'm worried that if it doesn't get corrected, it's gonna get worse. Now, I don't know what's going on with this Walesburg. I don't think this is accurate. I think something's broken. Let's go check 2 miners and see what it's reporting. I made the video last night to get more hash rate on the network so this doesn't happen. But unfortunately, I like a lot of you guys are turning on. You're telling me you're turning on. I appreciate it. Hopefully, I think Ergo appreciates it. Technically, we got the community in less than 12 hours, we got about 1 terahash back online, right? We went from 30 terahash to 31 terahash. But too much went offline yesterday, 10, 15 terahash went offline. And I think that there's larger farms that frankly, I don't know if we can combat it as home miners. I don't have a large enough farm. I know you guys probably don't. If that's where it's at. I don't know what the future of Ergo is at this point. I'll keep you guys up to date when I'm aware of what the EIP is. I think it's I think there's like literally potential without a change for it to be a completely dead chain. That's what it looks like if I look at the numbers. If it's not addressed, right? I'm just expecting that it'll get addressed. But if this doesn't get addressed and is continued to be ignored, it looks like essentially what you have is an exponential problem, right? Hash rate drops off, block times increase, epochs lengthened, difficulty remains high, miners can't make any profit. And I'm turned onto Ergo. I'm going to try to stay on Ergo until we hit essentially the next epoch. But I mean, like, and like, I know you guys followed me over here because we got hash rate moved over to Ergo. I can see like right here. Look at this. You guys are doing fucking badass. Ever since our video, you know, it's gone from 300 gigahash to 675 gigahash. But we're talking about terahash here, right? Like, that's the problem. But you know, if I also look at my personal stats, like, bro, we're not going to make any. We're just literally burning power to try to fix a chain at this point, you know. So I can only do this for so long. I think my intention's to do it through the 29th, but you know, I'm spending $50 a day trying to basically push it to the next epoch. Yeah, that was an interesting question to put, or an interesting thought too, right? Is do you get somebody to, you know, do you get a portion of the dev fund or something to go into NiceHash or mining rig rentals and push this, you know, push this hash rate along, push it to the next epoch? The problem is you have to do it extremely carefully. And here, I'll show you why, because that doesn't really work. And this is where things get even worse, right? Because if you increase the hash rate, you step the difficulty down, or not as far down, right? So math, it's fun. So if they tried to speed up the epoch by renting on NiceHash, the difficulty won't drop down to support 30 terahash on the network anymore. Like, let's say they rent a 70 terahash and put the network hash rate to 100 terahash, you know, then it's just going to stay at 16 longer. So you guys understand what I'm saying? Like, I don't think without an EIP and a change that you can fix it. I don't think you can fix it with hash rate. And that's kind of why I've been sitting down. Yes, CW asked for help with hash rate. I made a video saying, you know, let's help with hash rate. But the more I thought about this staying up till 3 a.m. and looking at it, more hash rate doesn't help. If we hit, like, it's a fundamental problem. Difficulty should be under 3p. Yeah. But I don't know, like, and hopefully we can have a dev on. We'll see an EIP come out here. But the more I thought about it, you know, and the more I think about it, and I'm going to remain on there, like I said, till the 29th. But on the 29th, I'm kind of done, especially if there's not an EIP. I'll stay on to vote for the EIP because GetBlock will hopefully allow us to do that as individual miners as they've done in the past, because GetBlock is awesome. But you know, beyond that, you know, like just running that's gonna, you know, cost me a few $100s. I'll be out. It's probably not worth it past that if they're not gonna make a change, I guess. But I actually don't think it fixes anything, right? Like I said, the problem is like if you rent on NiceHash and artificially increase the hash rate to speed up the epoch, you basically increase the next difficulty drop, right? Or decrease the next difficulty drop. So that, like, the difficulty doesn't go down as far. So, I mean, adding more hash rate to speed up the epoch doesn't really solve anything. Like, literally, like, 250 terahash has to come online and stay online for this problem to go away. And I don't think that's going to happen. Right. So I think an EIP has to be done at this point. That's how I see it. Or it just continues to have really long block times. Well, let's get into... I already showed you guys we're not making any money. We're losing $50 a day. It's done. All right. That's my mining profitability. Let's get into mining profitability on what to mine right after a word from today's sponsor.
Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research.
And welcome back, ladies and gentlemen, boys and girls. If you're looking at what to mine, you know what? 10 cents a kilowatt hour, you're effed. Everything's negative. I suppose first place is Flux, losing 25 cents a day at 10 cents a kilowatt hour. And it just goes downhill from there. Caspa's losing 33 cents a day. Ravencoin's losing 36 cents a day. We are in a dark, dark winter, my friends. Ethereum Classic losing 46 cents a day. Ergo says it's only losing 49 cents a day, but I'd posture that you're losing all of your money a day on Ergo right now. I haven't earned any Ergo in 24 hours. Yeah, that's where it's at. So what do you got to do? I mean, what do we got to do? We got, you know, as a community, we work together on sonofatech.locals.com. We try to push it. I did You know, I talked about Radiant on here. Radiant was, you know, I think up until we moved off of Ergo yesterday, we were still making like 15 bucks a day after power on Radiant. So there is that option. But if more hash power moves to it, that's not going to continue. So that's kind of the way it goes. Finding spec mineable coins. I'm playing around with some test nets. I'll let you guys know how that goes. You know, we play around on like Twitch with that kind of stuff too. So that's kind of where we're at as far as that goes. As far as difficulty on the networks, all this sort of stuff, obviously right now we have some wildness going on with Ergo. Basically the hash rate's down, you know, 15 terahash a second from what it was pre-merge. So Ergo basically didn't handle any of the hash rate that came off of Ethereum. Ethereum Classic's already, like, you know, they went, I think pre-merge, you know, 80, what was it, or 30 terahash a second, something along those lines. We can actually go get that number off of 2 miners. I think 2 miners is the easiest way to do this, right? Let's go to Ethereum Classic, look at the hash rate for the month. Yeah, about 50 terahash a second pre-merge. It did spike to like 300 terahash. So really it's only holding an extra 120 terahash a second. If we look at Ethereum Classic, Ethereum Proof of Work, which was brand new, pulled up another 34 terahash a second. Ethereum Fair, a 3.9 terahash a second. Not a lot moving off, right? Flux is at 8, I believe. Yeah, so almost 9 mega solutions a second. I think that's up from 3 mega solutions a second before the merge. So, you know, tripled their hash rate. But still, that's not, in comparison to Ethereum, that's not a lot. We're still missing a ton of hash rate, right? You got Ravencoin, which we've talked about as well earlier. It's at 19 terahash. So really, I think, what was it pre... Let's go back over there to 2 miners. I think Ravencoin was pretty low, like a couple terahash, right? Yeah, like 4 terahash. So 12 terahash converted. I mean, you convert Ravencoin, you kind of double it over to ETH. So let's say they pulled 24 terahash off of Ethereum. I think, guys, that we actually are at that 90%. We're almost at that 90% number. That Chandler Go 90% bankruptcy number, I think we're there. We're pretty damn close, right? We only have 120 terahash that came from a petahash of Ethereum on Ethereum Classic. And then the rest of the coins are pretty much moot, right? You got... maybe, what was it, 6 mega solutions would be like 12 terahash on Flux, 20 terahash from there. I mean, at best case, the networks took on 20% of the hash rate from Ethereum, it looks like right now. So we have about another 10% that probably has to get shut off before we get profitable on anything. I'm just spitballing, thinking through the math in my head. Now, if Ergo fixes it and can pull some hash rate off of Ethereum, there's some potential there. I think. Now, if you're a miner and you're thinking about moving equipment, of course, you could look at ASICs with the Antminer L7 still in first place at 1566 a day after power. Got the iPolo G1 at 1068 a day on Grin. The IB Link is killing it on Verge of all things at 1210 a day. Still profitable on Ethereum Classic with ASICs, with the Jazz Miner making 845 a day on Ethereum Classic. And then you got the Antminer D7 at 770 a day and the iPolo V1 at 756 a day. Got to go down to the Kadena miners. They've dropped pretty hard. The KD6 at 562 a day after power. And then if we scroll down and look at the S19 Pro, it's still under $3 a day, and that's if you're on Digibyte. If you're mining Bitcoin, well, pack it in, boys, because those margins are getting insanely low, under $2 a day. Let's get into questions and answers for the day. Remember, super chats are never required, always appreciated. First to be answered because they're the easiest to read. Tagging at Son of a Tech will highlight the message orange. I do want to get this super chat before I lose it. Arata Kasuga, thanks for the 20 pounds. Says, have fun soon, or have fun, son. Hope I help with the electric bill you need it, for the GPU miners. Sign off. Thank you, good sir. And then in the poll, I said, do you think more cowbell will fix Ergo? 46% of you say yes. 54% of you say no. I'm disappointed. I believe that more people should believe in the power of the cowbell. Let's go ahead and end that poll, though. And scroll up a little bit here. Swinny says, at Summit Tech, Armenio EIP draft already underway. Nice. Glad to see that. We'll report on it when it comes up. Elliot says, at Son of a Tech, do we get Red Panda's help with Ergo? I don't think we did. Rabid, though, did make a video. Scott says, at Son of a Tech, hate to say it, but you giving people daily hopium doesn't help. Doesn't help with what? I've been profitable every single day post-merge except for 2 days. It is difficult, though. Texas Ace says, at Summit Tech, power limit versus locked core. Locked core does not undervolt the GPU. Core offset does undervolt the GPU. The best setup for the most coins is both core offset and locked core, in my opinion. I think if you have access to actually setting the core voltage, because I think that setting the core voltage, like obviously like NVIDIA doesn't allow us to do that on Linux, but I think that's better. Because if you set the power limit, you do affect the memory speed as well. But I think in the case of like Caspa, like core intensive algorithms, I think you're right, Texas Ace. But I'm just thinking through it, right? Yeah, HiveOS does not allow setting it. Chadwick says, that's something like Salty. You're a better person than me. Ergo is in your debt. No, I don't think so. Hopefully they just fix it. Jacob Burgess, thank you for the $5 super chat, says, at Summit Tech, until I get a node and core wallet set up for Caspa, do you recommend either the web wallet or the desktop wallet? I use the command line wallet. I did see they have a web wallet that does function. I think in general, you know, desktop wallets are going to be safer than web wallets, right? But web wallets are going to be more convenient. But really, like right now, you know, the reason we use a web wallet for Ethereum is to integrate with dApps. The reason we use a web wallet in Ergo is to integrate with dApps. There's no real dApps to integrate with on Caspa. There is on a couple other coins like Novos, but that's another topic for another day. Justin, thank you for the $5 super chat, says, been watching for years, used to play Dauntless with you on Twitch. Nice. Keep it up in the struggling times, trying to help keep the rigs on. Thank you, good sir. Gravity Check says, ask Summit Tech, check Caspa hash rate. We did forget to do that. Let's go ahead and do it. Bam. Boom, boom. I assume Caspa hash rate's pretty high. Or is it coming back down? It's settled out, I think. I mean, obviously it went way up, but 260 terahash a second on the network. So there you go. John says, that's Simon Tech. Are you thinking about breaking your lease? I'm trying not to. Hopefully, no. Boy, Matthew says, that's Simon Tech. It seems Caspa runs hotter than Kapow. Is it? That would... on the core, yes. On the memory, no. Overall, no. If that makes sense. Detroit Irish says, that's Simon Tech. If you know, why does Erg wait 4 epochs to adjust difficulty? Can't they write up an EIP to adjust difficulty every X days and hours? The argument for this, we'll go ahead and pull it up so you guys have it directly from them. I have the article here. Not here. Well, I think this is what... they want me to subscribe. My understanding is that it's to prevent miners from cheating the system, which is it's kind of comical because that's what miners did. Anyways, just in a different way. But basically, it's supposed to prevent an issue where miners can change the timestamp related to a mine block to avoid increased difficulty on the network. That's the TLDR from the development team. Brandon says, that's Simon Tech. Check out the Caspa Stratum Bridge release. Will do. I saw the updates. I'm subscribed to it. So I get the notifications in my GitHub. Colton says, at Son of a Tech, I've heard this called the Great Crypto Reset. I kind of like that name. That sounds good. All right, ladies and gentlemen, boys and girls, we are going to call it over here for today. I'll be moving over to twitch.tv/blindrun here in a little while. And we'll be streaming over there. I'm going to see if my son wants to play some Halo Reach or whatever. He's off today. We are probably going to go to the... I don't know if we're going to go to the fair tonight. That's kind of up in the air still. But we're going to be streaming over on Twitch and playing some video games and hanging out. If you guys want to play video games with me, of course, I am playing Modern Warfare 2. But if my son wants to play some other stuff, we might do that for a little bit too. So that's where we'll be over there. A few more questions did come into chat. Stewie X says, that's Simon Tech. Do you know why the hardware wallets like Trezor and Ledger are so slow to support popular mined altcoins? Because you add vulnerabilities and issues, and usually like all the altcoins too. Like if you pay attention, you'll notice that the updates happen a lot, right? It's a lot to support. Paul says, S7 Tech, F2 pool was cheating ETH with timestamps for quite a while, apparently. Yeah. You know, and even with that, F2 pool was still not the most profitable. Village BC says, S7 Tech, I thought the 8 epoch is to give miners a chance to earn Ergo and vote. More to hold. Well, see, Village, there are yes, I think. I've been given multiple reasons. That was one of them. The other reason was this other, you know. So there are multiple reasons. Yeah, there's multiple reasons. Anderson says, that's Simon Tech. What do you think of Vertcoin? It uses less energy than Ergo. Yeah, it was meant to be for like gaming and mining. It's you know, that coin's been around a long time. You know, I've covered it a lot. I kind of put it in the bucket with Ravencoin to a certain extent, which is like, come on, do something. You know what I mean? The MAB says, that's Simon Tech, back to jiu-jitsu next week. Glad to see you feeling better. I am going back to jiu-jitsu next week. Thank you, good sir. We do have a $10 super chat from Brandon Higgins. Says, "Ask Sound of Tech, where do you get your 8-pin to dual 8-pin, 8-pin to 8-pin, etc. from?" I've got ones that have pins and wires come apart. Frustrating. I don't use those because they cause fires. I would never do an 8-pin to a dual 8-pin. That would be terrible. Terrible, my good friend. I've got a crazy kid staring at me over here, boys. We got to get going. Use, single 8-pin to 8-pin on all of your cards. Do not split it. Do not cause a fire. Mining Potato says, "That Sound of Tech, when is the GPU flood coming on eBay?" I don't know. We have like basically 80% of the hash rate not turned on, and I don't know where it is. You got me. I mean, I see some of it coming out, but like most of them are like P106s and RX 580s. The 3000 series are not getting sold. All right, boys, we got to get going. We'll be over on Twitch here in a little bit. Thanks, everybody, for watching. Give me a like if you don't mind, and then we will be live on Twitch pretty much the whole weekend. Hit the like, comment, subscribe. I'll see you next Tuesday.